The central bank here has decided to maintain its benchmark interest rate unchanged at 2.5% for the third session in a row amid concerns over the foreign exchange market and housing prices. Our economic correspondent Park Jun-han reports.
The Bank of Korea announced a third rate freeze of the country's base interest rate at 2.5% on Thursday, after cutting the rate by 25 basis points in May and holding it steady in July and August. The decision was widely expected as Central Bank Governor Rhee Chang-yong said during a National Assembly audit on Monday that he intends to prevent additional liquidity from overheating the property market.
While inflation remains stable, uncertainties in growth persist. With ongoing improvements in consumption and exports, and given the need to monitor the housing market, household debt, and exchange rate volatility, we decided to keep the interest rate unchanged.
A professor of economics also pointed to the volatile foreign exchange market as one of the main reasons why the BOK is unable to make a preemptive rate cut. While the dollar index remains below 100, the $1 exchange rate has been hovering around 1,430 Korean won per US dollar as of October, which is considered high compared to historical data.
The Korean won has become volatile recently, partly due to the uncertainty over trade policy, especially the questions surrounding the $350 billion investment agreement between Korea and the U.S. In this environment, the bank wanted to avoid adding further instability to the currency market.
Following the bank's move, the interest rate gap between South Korea and the United States remains in the 1.5 to 1.75 percentage point range. Eyes are now on whether the central bank will lower the country's interest rate in November. With internal and external factors such as high housing prices, a volatile foreign exchange market, and the upcoming U.S. interest rate decision in October, the BOK said the agency will closely monitor the market and act accordingly. Park Jun-han, Arirang News.